Aloha, my friends. Let's look at selling some cash secured put options on stocks we'd like to own, because I Have Success is all about that. Free stuff, paid stuff, all types of stuff. Okay, it's just really free stuff and paid stuff. Look, this if you have an internet connection, a bank account, and you spend money at least once a year, there's no legitimate reason for you not to be doing this. Prices are only going up, and why not make some extra money, right? If your money's sitting there, you don't really need that much money to start with it. How much money do you need? Hey, check out the free stuff. Go through that YouTube playlist and download this stuff. And if you need, after you do that, if you really want some one-on-one consulting, right here, got it here for you. Another thing that I'm going to have for you at the 1 minute mark is a video giving you the unfair advantages of doing this strategy. Boom! You saw it pop up. But you know what? I'm going to go overboard for you. Not only am I giving you that at the 1 minute mark, the unfair advantages, but I got another one coming in 5 seconds. At the 1 minute and 15 second mark, there it is. Boom! 5. Count them. 1, 2, 3, 4, 5. 5 reasons why you should be doing this. Let's get into it. Now, this is the paper trading account. I know some of you yahoos are going to say, paper trader, time waster. Hey, is that what you said when you went to military? Did you say, I don't need this boot camp. I don't need any of this training. I don't need any of this simulating stuff. Just send me to war from day one. No, you didn't say that. What about fighting fires? Did you say that if you're a firefighter? How about being a heart surgeon? Should you practice that a little bit? Should you have some training with that? How about when I went to them CPR classes? For some reason, they made me practice on a dummy. Is that what they made you do? Or did you just say to the instructor, no, I want to knock you out so I can practice on you. I want to do the real thing. Come on, people, come on. Get with the program here. It's time to wake up and smell the coffee, the roses, whatever you got to smell to realize that if it were true that practice and training is a waste of time, then it would be true throughout all aspects of society. But it's not, right? So don't fall victim. Don't believe your own BS between your two ears that paper trading is a waste of time. When it comes to managing risk, learn how to manage it before you potentially lose money. I have not looked over here at what's happening. So let's take a look. Now, if this was my real money account, this is what I would do. I'd take a look. I'd say, hey, what's up with this position? I got a short put, which means a sold put at $84. No days left to expiration. And what's the strike price at? 85. That means I'm not buying it. So when I say no days left to expiration, it's probably going to expire tomorrow. Yep, 21st, right? See 21st? All right. So I know by the end of tomorrow, what will happen is this will either expire worthless, which means the price of XLE will stay above $84, or it'll be below $84. What if it's above $84? If it's above $84, I'm going to keep this $24 and I'm going to move on with my life. What if it's below $24? Excuse me. What if it's below $84? Then I'm still going to keep this $24 and I'm going to purchase 100 shares of this paper asset at $84 and I'm going to start selling call options against it. That's exactly what I'm going to do. And this probability of in the money says there's about a 13.59% chance that that'll happen. XLF, what do I got going on over here? I got short one contract at the 32.50, and right here we're currently trading around 33.34, and there's not even a 5% chance of getting assigned. But same thing. What's going to happen if it stays above 32.50 by the close of tomorrow? Then that means I'm just keeping this $4 and I'm moving on with my life. What if it's below 32.50? By the end of tomorrow? That means I'm keeping this $4 and I'm buying 100 shares of this paper asset XLF at $32.50, which I'm happy to do. And then I'm going to start selling covered calls against it. Over here, not getting filled though, right? Not filled. I can tell. Boom. I can tell because this is still here. Nothing there. Trade price mark is $7 and some change. I'm trying to get filled at 15 and 20. Seems like a far cry, but I'm going to just leave it open for tomorrow, right? And one reason why, let's take a look at over here at the chart, see what just look at what I would consider the general markets. All right, so we see the four big indices of the stock market. You know, I wouldn't be surprised if it's going to be a bit of a sell-off. Maybe you get filled. If not, no big deal, right? I'll leave that open. If there's a bit of a sell-off, if XLF decides to take a dive, here we are, XLF. What's that look like? Actually, let's pull XLF over here. Just change that XLE to XLF. Maybe, right? Might be able to trade down into here, right? Maybe if it can hit it, even if it pulls back to this 33. I don't know how much that would make this put option go up, the value of that put option go. But you know, there's a way to try to figure that out. But there's a really easy way for me just to keep it open and see what happens from there. So that's what I'm going to do. Just gonna let that happen like that and see. And then see if we get filled on anything. Is anything, looking at these, anything look exciting to potentially sell something at? Let's see if we can sell a 1 day, like a 0 DTE option. Let's take a look at XLK, just because I haven't actually looked at this before, but my guess is it's going to be pretty liquid. So we'll go like this over here. XLK. Keep in mind, this is not financial advice. This is totally just playing around to show you some stuff. You should not do this. This is not necessarily suitable. You should figure out what's suitable for you. But looking at liquid, you know what? XLF is way more liquid than we got zero DTEs. Let's look. I'm gonna go with a 0 DTE, but I'm just trying to get an idea of the liquidity of this. Look at that. Doesn't seem to be as liquid as XLE. But let's go back here anyways. It might not, if it's not as much of demand. Oh, look at that, man. Look at that. 6 cents to $1.26. That's pretty horrible. Let's see if we can, what is it trading at? It's currently trading at 48. That's not exciting. Let's see. I wonder if we can. All right, here we got not as much of a spread here, 5 cents to 21 cents. And then by the delta, showing us that we have roughly about a 13% chance of getting assigned. The most it traded for today was 16. The lowest was 11. Just for fun, let's put something in the market. Let's go to see if we can get filled at 10 cents tomorrow. So what would that mean? Change this over to good till cancel, just so when I come back home it'll still be there. I'm going to pull this over here. I have these separated. I like to put it in open orders, and then when it gets assigned, if it gets assigned, then I'll put it into whatever category I like to have it in, just to kind of keep stuff organized. So this is the breakdown of what this order is, and basically we're going to sell one. It says 100 because one option contract is controlling or responsible for 100 shares of the underlying stock, which is XLK, and XLK is an ETF, a technology ETF. If you wanted to know exactly what stocks are in that, you could go to Yahoo Finance. Then you could go like this and put in XLK. And then you could go right here under holdings. And at least it would give you a breakdown of the top 10, right? All these different companies. And if you wanted to, if you were going to trade one of these ETFs often, you should be aware of what these top 10 are. And you can watch these top 10. Because let's say if 50% of the top 10 were going up and 50% were going down, that means your ETF has a good chance of going sideways. If 3 were going sideways and 7 were going up, there's a good chance your ETF is going to go up. You like that little trick there? I don't really know if it's a trick. Is it a hack? What clickbait worthy thing should we call that? Well, let's send this in there. So now we got an extra one just for fun. Now, normally what I would do when I'm using real money account, I'm not going to just be so willy-nilly on it. I'm going to go through, if it's the first time I ever looking at selling a stock, selling an option on that particular stock, I'll probably start right about, actually, normally I'm going to start right here. I'm going to take a look at what's been going on for 6 months, right? Just to get an idea of what's been going on for 6 months. And then I'll move over here. Now I get an idea of what's going on for a year. It's almost moving sideways. It's a little bit up. You see the 200-day moving average got this downward slope, but prices not too much above that, right? It's been debatably, right, sideways. So let's look at 5 years. Right? Then it's not so much I want to look at 5 years, but I want to look at a weekly chart, and I have this set for 5 years. Right? We see, boom, it hit this high up here. Oh, look at that, right? When we see this, look at that, boom, hitting up against this. What's going to happen? It's going to be interesting. Last time it got here, it went back down. So what's going to happen now? Then, if I want to, well, okay, if it's the very first time, I'm definitely going to look at the monthly chart. And then from there, I'll take a look at where's it at in relationship to the moving averages. All right, back to 6 months, 1 day candle. And I see we're kind of at the top of all these moving averages, which are kind of getting spread out here. Spread out. But it looks like this one's starting to potentially maybe roll over a bit. So depending on if I wanted to get filled or not, what do we sell it at? Like 140. What was that? What was this one? XLK. Okay, 146. So 146. So we're up here, right? It's that's a little more just kind of winging it to see what's going to happen and then whatever. But if I was being a little more strategic, maybe I'd sell a little lower. But ultimately, what matters is, are you okay with buying 100 shares of this particular asset at that particular price? Hey, if you are, like, that's ultimately what it boils down to. You don't want to put yourself in a position where you're getting ready to be assigned and you're like, no, I don't want to buy it. So make sure you're selling at the price that you want to buy it at. And if that means you don't get as much a premium up front, then deal with it, right? What do they say in the Marine Corps? Suck it up, buttercup. That's what happens, right? You want to play this game. Right? There's these different things. I'll break the bad news to you. You're not Ken Griffin. You're not Sam Bankman-Fried. There's the Security and Exchange Commission is not going to pull special favors for you. If you're watching this video to learn from and not watching this video to make fun of me, then definitely you're not going to have special favors pulled for you. I'm not going to have special favors pulled for me. Do some people have special favors pulled for them when it comes to the stock market? Yes. To pretend otherwise, to me, is, it's like pretending this tooth fairy is in existence, right? I'm too old for that. My mom isn't too old for that. She still wants to believe that it's all like fair and equal, and Ken Griffin is going to get the same stuff, and Ray Dalio is going to get the same treatment as her. But, she wants to live in that la-la land. She can. You can too if you want, but your good buddy Brent is just telling you here that for you and I, not pulling special treatment. So don't sell a put option at a price that you're not ready to buy it at. And then what I'll do is I'll look at the cone of probability. Down here is the date. And so I line up what date. Okay, where's my expiration? And then I start, you see over here on the price, I start looking at where's it at in the standard deviation. And I kind of put all that stuff together. And then I'll even take a look at the volume profile and say, oh, okay, like right now, what do we see? We see a lot of volume in here, but don't be surprised if it pulls back to here, right? It's having a hard time getting up here. Let's look. This is a 1 year, 1 day, right? Now, when we look at the 5-year weekly, right, we got a different volume profile. Right? Even in the 5-year weekly, let's look at the monthly. Look at that. Volume of transactions. Let's go back to the weekly. The volume of transactions, right? So wouldn't be surprised if it stays in here. By looking at the volume profile, right? It'd be a little more surprising if it's moving up into here by looking at the volume profile. Now, let's say it started dropping, right? Just on the weekly chart. We're looking at a weekly. Let's say it started dropping down to here. Let's say it got all the way down into here. See how it's got this little gap here? There's a chance, because there's been so many volumes of transactions down here and up here, there's a chance it could get pulled back up to there. And then you can look in for support and resistance, back at the charts and all these type of things. So none of this stuff is guaranteeing anything. It you can use it as incomplete information to try to make your best decision using incomplete information. So in the shorter term, like more real short term, we're looking at 1 day. Right? I wouldn't be surprised if it kind of wiggles around anywhere in here. Right? This is a daily chart. Right? It can wiggle around in there, but right, see there's a little gap right in here, so maybe it's going to stay in here for a little while. But in a 1 year time frame, here's where the most amount of transactions have been. So don't be surprised if it pulls back in here. You can get that stuff set up. You don't have to get that stuff set up. That's it. That's it, my friends. We're gonna wrap it up with that. We'll see how that stuff unfolds tomorrow. What should be the main takeaway? Okay, the main takeaway is when you're selling cash secured put options, sell at a strike price that you're going to be comfortable purchasing the stock at. Look at that. Think about risk management first. Part of managing the risk is getting assigned. So don't get greedy and choose your strike price based on how much money you're making. Keep your emotions in check and choose your strike price based on, if I were to get assigned, what price am I happy to buy it at? Right? Okay, good luck.